Good afternoon, everyone, and you're all very welcome to Thursday's market preview for the US Session Open. Very, very busy and very, very volatile 24 hours or so in the financial markets, as we can see, broadly speaking. You only have to look at the volatility we saw last night. The US Fed, led by Chair Powell, increasing the interest rates by 0.75%. We saw the initial volatility come through in the markets, but at around about 7:35, 7:40, when he started to begin speaking, we saw the markets rally right through into yesterday's close. Repeating very much kind of what happened in May, as soon as he stepped onto the stage at the beginning of May. Very, very similar, I suppose, repeat of what actually happened back then, where we saw the markets rally. Since then, the markets had closed fairly strong overnight. We closed at near highs. And again, the heavy onslaught of selling has come back into the markets again overnight during the Asian session, and then during the European session this morning. The futures has been hit again. Now, again, compounding the misery, we also have seen that the Swiss National Bank and the Bank of England have both raised rates. So Bank of England at 12 o'clock today came out with a 25 basis point increase, or 0.25%, signaling, and all nine were in favour of the increase, with 3 of the 9 voting for 0.5 or higher. Now, structurally, again, a surprise out of the SNB, Swiss National Bank as well. They have upped their rates from 0.75% negative to a negative figure of 0.25. So they too are also increasing their interest rates. And we saw that very, very visibly in the FX markets. You only have to look at the movement in the Swiss franc this morning when that news came out. So definitely, as we look at news, definitely does move markets. And we've seen the price action come down. Since our little market preview this morning, that I had done, the markets is continuing to slide lower in the dollar Swiss again, showing that there's maybe even more to come in the revisions of some of this Swiss franc weakness that we've obviously looked at over the last number of months. So massive movements in the indices, massive movements in the stock markets, and of course, massive movement in obviously the FX markets as well. At 12 o'clock, we had the Bank of England interest rate meeting. And of course, we saw that initial selling in the pound. However, it was short-lived. We did see that snap initial selling on the news. Price action sold off approximately about 110 points, and that has since been bought back as the volatility is now turned the other way, and we are sitting up around 122.50. So you can see the volatility escalating across the board as we progress through the session. So multiple different central bank raising or hawks increasing their rates over the last 24 hours, which again leads to additional volatility in the markets. So broadly speaking, then, I suppose, as we look to 1:30, we also had economic data at 1:30, which all came out less than expected. The Philly Fed manufacturing survey came out less than expected, as too did the initial jobless claims and obviously the building and housing starts as well. So you can see how the negative data with the hawkish outlooks is really starting to give a bearish sentiment to the market. So as we look to the US markets, again, volatility has been rife across the board, but this is quite interesting when we look at some of the price action moves from last night. Massive initial buying, liquidity has been taken out, and all of a sudden, through the Asian session, through the European session, the futures has plummeted right back into these levels that we were at the weekly lows. So it'll be interesting to see now, does these levels actually hold up, or do we see a more even elongated sell-off through the afternoon into options expiries, which is obviously tomorrow as well. So we've talked about it this week numerous times. Options expiries, the biggest ever on record. So it'll be worth keeping an eye on that. In terms of volatility, a lot of retail traders tend to avoid that trading day purely because of the volatility and the back and forth in the markets. So if you are trading tomorrow, it's definitely something that you should be conscious of. As we look at the S&Ps, again, similar scenario to the S&Ps. We had a fairly consistent consolidation through the course of the week. Last night, we did see that bump up higher. We had taken liquidity out of this region, and the price action has actually U-turned very, very sharply and is now sitting below the lows of the week. So it's interesting how we've taken the liquidity on both sides of this region. We've taken the highs, now we've taken the lows. So it'll be interesting to see what is the next I suppose, step for the markets in terms of development. Do we get that little bit of a retrace to clean out the rest of this selling price action, or do we get a straight line continuation? So that will bring us up to the 230 open. Similarly, again, with the Dow Jones, we came straight through to our weekly highs, broke through, noticing the wicks, price action topping out under that 31,000 level. And then again, simple, fairly straightforward reversal, price action topping out, and the momentum very, very swiftly changing. Again, sellers taking control of the markets and driving to new lows. So that really does bring the volatility to its peak into the open. So as we look at now the market profiles for the day, again focusing on the SPX, so obviously the market profiles is volume weighted, so we can assess not just the candlesticks, the physical candlesticks on the charts, but also the illustrated volume backing that up. So we can see how it's a fairly straight line selling through pre-markets this morning, overnight, into the US session open, where the price action currently finding itself. So realistically now into the US open, for the S&Ps in particular, it's all about how does this 3,700 level hold up in the markets. Are we getting a little bit of revision and a little bit of buying off these lows, or will we see the markets break through and continue to progress to the downside? So it'll be worth keeping a very, very close eye on this 3,700. And again, a nice psychological round number as well. Our POCs 3714, which sits price action currently below it. So if we look at our 30-minute prints, we can see how actually the price action is just borderline holding at this 3,700 handle. So again, watching that through the course of the open from 2:30 into 3 p.m. and then through the course of the afternoon to see if this selling becomes more widespread and more persistent through the course of the afternoon, rather than just that initial sell-off we saw this morning and from the early parts of this morning as well. So worth keeping an eye on that. So 3,700 is kind of our focal point for today on the S&Ps to see, does this level hold up? And of course, considering now that we are below the POCs. So all eyes really on the market profiles around this region to see how does the price action perform on the D print, which of course, as we know, is the 230 print. So worth keeping an eye on that. As we now look at the NASDAQ, which is our next on our list, the NASDAQ for today, again, fairly widespread selling through the course of last night, from kind of 10, 11 o'clock last night, right through where we had our highs. Then obviously 12, 1 o'clock, we started to see that top out. And since then, the market has pretty much unwound all of the Fed bump that we saw last night at 7:30. So again, it all depends really on how does the price action, how does the markets react on today's open. So that is why the fulcrum area between kind of 11,250, 11,300 is going to be the key area to see, does this area hold up for buyers to come back in terms of supply and demand and in terms of price action, or do we see a kind of a further sustained move to the downside? So that, of course, then brings in this region, as we said here, 250 being our value lows, 294 being our POCs, which is our point of control for those who are following along. So as we can see at the minute, if we look at our 30-minute prints, we can see how the NASDAQ is just about holding up above this region. So again, from 2:30 into that 3 p.m. D letter print close, we'll be assessing the price action, assessing the battle between the buyers and the sellers, and then eagerly awaiting, I suppose, more conscientious and concerted directional move in the afternoon to kind of take advantage of that. So worth keeping an eye at that as well. And of course, it'll obviously depend, because if we do see that 250 level breaking through, that will put a lot more pressure on the indices, which will probably lead to even more downside movements. So again, keeping an eye on those lows. If they're taken out, obviously that's going to put a lot more pressure on these markets to potentially even take these lower. And then last but not least, with a minute and a half to go to the open, again with our Dow Jones, as we said, topped out, has taken out these lows of the weeks, both even body closures here, just below 30,300, and also these wick lows as well, we've actually taken through. So if we look at the Dow Jones for the afternoon, we can also see very, very quickly how the concerted directional bias is set at these nearer term lows down in this region. So of course, from a market profile perspective, if you're a traditional retail trader, you would say, well, we've broken through, we're retesting, we're holding underneath, so this is probably a support area that's going to return to resistance. But from the volume weighted price action, we've manipulated it. We've taken the highs, now we've taken the lows. Will we see a little bit of a bump and run back into the range, or will we see a more elongated sell-off? Only time will tell off the back of that. So again, the areas of interest becomes around this region, around 30,100, okay? So we've got 3173 as our point of control after this widespread sell-off from last night. We've even got a couple of gaps showing that prices weren't even being filled or being quoted. And then, of course, assessing the volume down in this region where we've had most of our volume for the last 5 or 6 trading hours or so. So again, anything kind of below 30,000 really does bring the bears back into town for a more elongated sell-off through the course of the afternoon. So 30,000, a nice, really 000 is a nice psychological round number. All eyes to see how does the price action react. Because if we start seeing wider sell-offs, then we're going to be looking at kind of the broader levels of interest. You only have to look at 29,500 as the pre-COVID pandemic highs as a potential target point, that if the Dow Jones continues to sell off, these could be areas of interest where the price action could find itself very, very quickly, and even ahead of tomorrow's options expiries that we've kind of talked about throughout the course of the week. So that's pretty much it for the open so far. So as we look at the kind of the gauge and the initial kind of price action on the open, the Dow Jones as well, we can see a little bit of a softer opening so far in the first couple of seconds. But of course, it's not just a case of that first initial impulse. It's all about assessing the price action in the first 3 to 5 minutes into the first half an hour to determine if there is kind of more concerted trend direction, and then being able to apply a logic. Because often have we seen the price action 1 minute being up, the next minute being down, and being a very, very flat and volatile 30 minutes. So again, on the S&Ps, even floating on the shorter time frames, this 3,700 level is still holding up so far. So 36.95 to 3,700 still holding so far. So again, worth keeping an eye to see if these levels are sustained. So obviously 1s, 5s, 15s will also help with that as well in terms of directional bias. And even again on the NASDAQ, you can even see there's a little bit of buying coming in initially. Let me just close these off. 1 minute. We can see that buying coming through in the last minute or so, and the NASDAQ looks to be kind of finding a little bit of a temporary bottom. So again, it'll be interesting to see if these levels, if this bottom actually becomes a little bit more widespread and we see a little bit more buying impetus. If not, then obviously looking for these levels to break through. So initially speaking, these levels are holding their own into the open, which is obviously a positive sign after the consistent and heavy selling we saw from around about 3-4 o'clock this morning, UK time. Right through to where we are kind of at the peak of the session open. So watching these areas with interest, watching the price action being fully updated with all the news coming in the markets. So obviously with the likes of the SNB and Bank of England, and of course setting ourselves up for what will be obviously a very, very volatile options expiry tomorrow through the course of the day. So worth paying very, very close attention to that as well. So that's pretty much it for today's open, folks. So if you have any questions at all, feel free to reach out to us in our community. And of course, if you are interested, you can obviously get in touch and we can get you added to those communities as well. All right. Have a great day and trade safe.